Okay, you see this kind of move, this portion. Okay, every time you see something like this is what I call unsustainable uptrend. Price is continue climbing up, but at one point in time, it's not going to be sustainable. It needs to do either of these two things. One, it needs to do this. Then it will continue going higher. It needs to do either of this, or it needs to do this. Come down and then go like this. And then we now are interested in shorting it. Okay. Every time I see something like this, okay, I know that price must do either of this. The question is, when is it going to deliver you only? Okay, there's no way you're going to see price doing this, keep going up like this in this manner. It's not sustainable. Yeah, I can show you one classic example on Euro Pound. Okay, you see this? You see this similarity of how price is going up? Okay, this is on daily, so let me just measure how long it takes to crawl up from here to here. It took 81 days. Okay, you want to know how fast it drops down? It drops as fast as 17 days. Okay, so that's what we mean by you can enter a position here, hold for 81 days, you become very happy. Then within a short span of 17 days, you realize you lost all your profits. Okay, so that's the part where I tell all the traders that when you see something like this, just know that this move is not sustainable. Don't go and long it. Because you can long it and then every day you profit a little bit, you become happier, and then the next day you wake up in the morning, you realize all your profits are gone. So don't go and trade this kind of move, but expect this kind of move to give you either two things. Either a move like this that Euro Pound showed you, or a move that goes slow. When the move comes slow, you know you can now expect more upside. For Euro Pound, what will happen? Most high chance, high probability, it will go like this. And then you can expect one more down. Yeah, so that's my hint for you for this sharing session. When you see a move that is like this, always think that the trend is not sustainable. At one point in time, it needs to correct. Okay, so don't go long into it. So similar to Aussie Canadian. Okay, so Aussie Canadian of course happened on a shorter time frame. It's the same. Whatever time frame it happens doesn't matter, but as long as it gives you that kind of nature of how price is moving, very high probability it will repeat itself. Okay, so this kind here, a lot of people would say, oh, it broke support, it broke resistance. Okay, like this, it broke resistance time too long, right? But what you realize is when price decides to come down fast, it can come down very, very fast. Okay, if it doesn't come down fast and it gives you a slow move, as what I drew just now like this, then you want to look for more upside after that. Okay, in any case, right now, you shouldn't do anything. Okay, but if you want to trade the downside, you can. Okay, which means that if you want to trade the breakout, you can trade the breakout. Okay, when you trade this kind of breakout, when you have the chance to move your stop loss, you move it. Because you can do two things. If it drops all the way, happy for you. You achieve stop loss, you are still safe. Okay, if it doesn't drop all the way, okay, if it only comes down like this, even more, you should get out at break even, be happy with that, because your direction is up, not down. Okay, so in either case, when you trade this kind of breakout, shift your stop loss, because you either write the profit or you get out at break even, both of it, you should be happy with it. Yeah, so that's...
If there's no divergence,
not as confident. That means this crawl up might not be completed yet. Which means price can still continue to inch higher and higher and higher. But at one point in time, I can tell you very high probability it needs to come first. It needs to come down first. Cannot go up infinity like this. Yeah, there's no like the best way to set, right? But I'll just show you where you take reference from where the start of that move starts is important. Okay. So for example, if I take the reference that this move up is impulse, right? Then from here is where it starts to crawl. So this is where the very bottom is. Okay, so this is my impulse. Then I need to change color. This is my impulse. The red color is my impulse. Alright. Then the blue one is where it starts to crawl. So in this case, this is where my start of an impulse is. This is where my start of a crawl is. Okay. In this case, I'll use a fib. I'll start from my start of the impulse, pull it all the way to where the crawl ends. Okay, the first target would be at 50%. That's the first target. Yeah, green too. Okay, so if let's say this is the crawl up, this will be trend line. So if it breaks below, okay, so the breakout order will go something like this. The breakout order will go something like this. Okay. So usually it will stall at a 50%. Alright, so most of the time at 50% here, it will do this. If it's going to go, it's going to go like this fast, and then it will go slow. And then it will give you another opportunity to come back down again. So if you want, you can remove this take profit 1, and then of course write for a second target. And then give you another opportunity to scale in. But most of the time, I'll just take it first. Then when it comes again, I'll enter again. The stop loss is there to make sure that once price hit my stop loss, I know that it's no longer valid, and then I get out. But before price hit my stop loss, I know that there's still a higher possibility it will go with my direction. Okay, so just show you why 50%. It's not a magic number, but you can see this crawl up move. Price drop, it drops to 50%, and then it stalls there. You see that? Price crawl up, and then when it drops, it just drops to 50%, and then it stalls there for a while now. So most of the time, the drop will drop to 50% of the entire move since the start of the impulse. Okay, so for Aussie Canadian, okay, I will take it from here. This is the most recent one. This is where it starts. 1, 2, and then it starts crawling. Of course, if you're on conservative, right, you take the higher low, then your target will be higher. Then it's actually more conservative because it's easier to hit your target. Yeah. So in this case, if this is so, because this crawl up is pretty steep crawling up, you can take a more conservative target. Because if I take my retracement from this low to that high, right, and I decide to, let's say now, put a breakout like this, stop at the most recent high right now, my risk reward is already 1:2. So if this is very conservative, so if I put it all the way here, my risk reward can go up to 2.5.